What is up guys, Taiki here, and in this video I'll be going over the recent $1 billion raise by Terraform Labs from various VCs, and I'll be going over what the implications are for the UST peg, and I'll be, as the title of the video, making a case for Luna in a bear market. So if you like the content, please like and subscribe and leave a comment in the comment section below. So first of all, let's go over this, right? So Luna Foundation Guard, right? Titled LFG, right? Let's fucking go. Raised $1 billion to form a Bitcoin reserve for the UST stablecoin. This came from Jump Crypto, 3 Arrows, and other VCs. And proceeds for the $1 billion sale is going to go towards establishing a Bitcoin-denominated Forex reserve for UST, Terra's biggest stablecoin. So, this announcement just came yesterday, so it's not fully clear what this actually means, right? Because, we thought hey, isn't UST fully backed by Luna, or algorithmically backed by Luna? And are you saying that now UST is gonna be backed by both Luna and Bitcoin, right? It's unclear, right? And depending on when you're watching the video, I might be completely off. But from my understanding, UST is still backed by Luna. But in times of crazy market volatility, the Bitcoin reserve is going to come into effect to help maintain the peg. So let's go over the Jump Crypto announcement, right? And the $1 billion sale. It's titled the Automated Market Reserve, right? AMR, to backstop the UST peg in times of severe volatility. And this is important because there's always been, this FUD around Luna about, it's a Ponzi, it's going to collapse to zero. And those arguments are valid, right? It's definitely a Ponzi-nomic system. And, when in times of severe market volatility, there is a chance that, UST could depeg, right? And in the most recent crash, I think UST went to 95 cents or 96 cents, much better than I think back in May of 2021. It went to 80 cents or something, right? 80 to 85 cents. So the UST peg is getting stronger, and Jump Crypto said that the AMR is going to use its reserves to absorb the demand and arbitrage that exists when UST is trading below its peg. So what is the the significance of Jump Crypto, right? So for those that don't know, Jump Crypto, they're a market maker, right? They're arbitraging, and they make a lot of money. they make a lot of money arbitraging, market making the crypto markets, and they are long-term aligned with the future of crypto. Because in the recent Wormhole hack, right, the $325 million hack, right, where a hacker took this much ETH from Wormhole, the bridge, Jump Crypto, they put up $120,000 of its own ETH, right? $300 million worth of ETH to backstop it because they believe in the bridge and they want to support it in this stage of development, and we're going to come out stronger than ever, right? So Jump Crypto, obviously very well capitalized, very long-term aligned with crypto, and they put their money where they put their money where their mouth is, right? Sorry, kind of blinking out. And UST right now isn't completely decentralized, right? In an ideal scenario, right, there aren't really big money backing the UST peg, but right now market makers Jump Crypto, VCs like 3 Arrows, and Terraform Labs is backing the peg behind the scenes, right? And you can expect that if we get some crazy market volatility, UST is being battle tested, right? Jump Crypto is going to help maintain the peg, right? However, you can kind of see that there are steps being taken in order for UST to, become more battle tested over time. Because UST, maybe this is a sign that maybe UST being algorithmically backed by Luna alone isn't enough to make it a decentralized stablecoin. Maybe UST can be a decentralized stablecoin that's backed by other decentralized asset, right? It doesn't have to be fully backed by Luna, as long as UST it can be a censorship resistant stablecoin that can offer people around the world decent yields. And Jose Maria Maceda, he's from DeFi Digital, right? Helped design the tokenomics for Mars and Astroport. Also goes over this aspect that hey, UST, there's always the risk of a bank run, and we're taking initiatives to help backtest this. And if you kind of read between the lines of all these people, you can kind of see that maybe in the future UST as a decentralized stablecoin isn't going to be fully backed by Luna, right? But maybe it's going to be backed by AVAX, Sol, Atom, ETH, Bitcoin, right? It can be a decentralized stablecoin backed by all sorts of decentralized assets. And maybe there could be arguments against like why this might be bearish, the price of Luna, right? Because right now, if UST is above peg, people can burn $1 worth of Luna to mint 1 UST, right? And this kind of creates this powerful tokenomics aspect that if there's demand for UST, Luna is going to be burned and it's going to be deflationary, right? And you can kind of see this in the history, right? Supply chain. I'll provide this in the description, but Terra Analytics by SmartStake, you can kind of see that, hey, like in a bearish phase, right? There's like high demand for stablecoin yields, and it seems like more and more people are buying UST, which is incentivizing a lot of people, and like market makers like Jump Crypto to burn Luna, right? And essentially profit off of the arbitrage. And Luna has been a deflationary token recently, and maybe this is one of the reasons why the price has been doing well recently. And I'll be making a case why like maybe Luna can outperform in a bear market, because in the 2018-2019 bear market, Bitcoin outperformed most coins except Chainlink, right? So let's kind of zoom out here. So Chainlink actually outperformed in 2018-2019, right? As it's going up only. Recently, it's like really underperformed, right? So you can look at the Link ETH chart, right? So taking the price of Link, dividing it by ETH, and as you can see in 2018 and 2019, and for the first half of 2020, like Link just outperformed everything, right? And this is going to be like the same for Bitcoin. But recently, Link has underperformed, and maybe the Link bubble has burst, right? I like Chainlink. I think has pretty decent fundamentals, but maybe the tokenomics has some issues. But maybe Luna can also be an asset like Link, right? At least in 2018, 2019, where it just outperformed ETH and BTC. You can look at the Luna BTC chart, right? So taking the price of Luna, dividing by Bitcoin, right? This has been right consistently in a bull market. The same goes for Luna ETH, right? There isn't a perfect price history, but it's in an uptrend, right? And part of the reason is because obviously it's because of the tokenomics, right? It's got strong tokenomics, and the anchor reserve, right? Let's go to the dashboard. The anchor reserve recently got refilled to $500 million worth of UST. So this is where the 19.5% is coming from. And in the short term, right, these yields aren't sustainable, right? Terraform Labs, they're consistently having to replenish the yields. Because these rates are way too high. But I have some UST on here, and with the recent announcement, a $1 billion raise, with the understanding that there are market makers backing the peg, I think that I think the UST FUD is overblown. I think people FUD UST for engagement, right? Because FUD gets a lot of engagement. But I think the UST peg is safe, and I think these yields are really attractive in these types of market conditions. And also one thing I want to go over is that right now the borrow rate for Anchor is positive, meaning that if you take ETH or Luna, right, put it as collateral and borrow, let's say UST, you're being paid to borrow because you're paying 12% APR for UST, but you're being paid 15% in Anchor tokens. And for some reason, the Anchor token has went up a lot, right? It's kind of doubled since the end of January. I don't really know why this is, right? But it's happening. Maybe it's because they're going to introduce a VE Anchor. I don't fully buy into that aspect, but people are buying it for a reason. And in terms of Anchor sustainability, if the Anchor price is going up, then it means the distribution APR is up, meaning that more people are going to borrow, right? They're incentivized to borrow, which is going to help replenish the Anchor reserve. So in these types of markets, I think there's a strong case to be made for USD. 19.5% is really good, and you can't really get that elsewhere, right? The idea of there is no alternative. Stocks might be bearish, crypto might be bearish. UST, right, could be a good way to earn yield on your assets, right? So this video isn't really a bullish Luna video. It's more bullish the UST peg and the bullish Anchor yields and the opportunities that this presents. So let's kind of go over Mirror, right? Because I went over Mirror back in July of 2021, and I've been historically, I've been bullish Luna all this time, and this idea of short farming. So let's just focus on Microsoft, I guess, because right now it has the highest ratio. But what you can do is you can take aUST, which is interest-bearing Luna, right? Sorry, interest-bearing UST, right? So aUST is appreciating 19.5% per year, and you can use it as collateral to mint, or not mint, but to short farm Microsoft, right? So this position is appreciating 20% a year, right? So I'm using interest-bearing collateral to short farm Microsoft right now, which is yielding 22%. So if you actually look at historical mirror APRs, you can kind of see that. Let's go to the charts here. Short APR. Microsoft historically has had a short APR of 18.5%. So let's put that in the calculator here, right? 18.5%. What the hell? Okay, 18.5%. Okay, let's increase the decimal points. Let's go here, 18.5%. And let's say you want to go delta neutral, meaning that you want to short Microsoft and long Microsoft by the same dollar amount. So if you go to the long APR, Microsoft here, 15.36%, right? So let's just say 15.4%. Okay. And in that case, let's just use a round number, right? Let's just say you put $10,000 in the UST, use it as collateral to short farm. And I mean, I have tutorials, right? But essentially you have to over collateralize. So in order for you to short farm Microsoft, you have to put up collateral, mint Microsoft, and then sell it in the open market, right? So these positions has to be over collateralized, and as long as your position gets to below 150% collateralization ratio, you could get liquidated, right? So Mirror says the safe amount is 200%, but let's actually do the math. So if you go to here, right, Microsoft short, $10,000 in collateral, liquidation level 150%. If you set the collateral ratio to be, let's say 220%, you're going to borrow this much, right? And Microsoft would have to appreciate 47% in order for you to get liquidated. That doesn't seem unlikely in this type of market. So let's say 200%, right? That's safe enough. And in this case, Microsoft would have to appreciate 33% overnight in order for you to get liquidated. But keep in mind that you're using aUST as collateral, meaning that aUST is appreciating 20% per year, roughly. So it's not just that if Microsoft goes up 33% over the course for the next 12 months, you're not going to get liquidated because your collateral has appreciated by 19.5%. So let's just use $5,000 for the safe figure, I guess. Put it into here, right? Short farm, and at 18.5, you're going to receive roughly $900 per year, right? You're being paid out in the Mirror token, right? And Mirror token is a farm token. It's going to get dumped on, right? But for the sake of this example, let's just put that here. And then let's assume that you want to go delta neutral. So whenever your UST gets unlocked, right? I think it takes 21 days. You can go back and long farm it here, right? I'm not going to take like the current nominal value, right? Because these rates fluctuate. That's why I'm taking like the historical value of from this website. I'll also link this in the description. It's not like completely delta neutral, right? With the way like long farming works, but it's pretty close to like delta neutral as you can get. What we can also do is like if you're bullish, like gold, for example, right? If you look at the price of gold, it's like doing well, and gold is gold, right? It's not that exciting, but maybe you can short a tech stock, right, like Microsoft, and long farm gold, and historically, gold yields. Where's gold? Down here, right? 10%, right? So it's not yielding that much, but if you want to short a tech stock like Twitter or whatever, right, or Microsoft, and then long something like gold, right, that's also a strategy you can deploy. But let's just assume that I just do Microsoft, and if I do Microsoft, right, and short farm a mirror, long farm a mirror at current rates, at current historical rates, with the current price of mirror, you can take UST and earn 36% with it, right? Which is pretty attractive if you want to go risk off, right? Let's say you want to go on vacation. Maybe you can just open this position and just like go on vacation, right? Maybe that's something that's attractive to you. So the point I'm making here is that maybe Luna can outperform in a bear. I mean, look at this chart. This is ridiculous, right? It's up so much. Let's take this off log. So it's okay. That looks a little bit more scary. Let's zoom in so it's less scary, right? Here, maybe Luna can outperform in a bear. And I also forgot to address the idea of, I guess, if Luna isn't like all the collateral, right? Not, I guess, all the backing of UST, maybe that's less bullish Luna, right? Because less Luna is going to be burned. But maybe the different idea or different mindset that you might have is that like maybe UST being algorithmically backed by Luna isn't completely scalable, right? Maybe it has to be backed partially by Bitcoin, right? Maybe more by Bitcoin in order for UST to grow in market cap. So let's use round numbers, right? Let's say the limit for the market cap of UST is 20 billion, right? If like Luna is backing it, right? But maybe if it's like 50% Bitcoin, 50% Luna, maybe the upside is like, I don't know, 100 billion, right? I'm just using round numbers. Well, in that case, $50 billion worth of Luna is going to be burned over that time period. So even though less Luna is being burned per UST mint, right? If this type of system is going to be more sustainable, right? More scalable for the UST market cap, then it's going to be bullish Luna, right? But anyways, that being said, this is like the bullish case, I guess, for UST, right? UST holding peg, and if UST holds peg, and the market cap of Luna keeps going up, right? Or I guess UST keeps going up, and it's going to be, all things being equal, it's going to be bullish for the price of Luna, right? And as you can see, market cap is just going up, right? Market cap is going up for UST, and I've often mentioned that, hey, I think Luna is the top 5 coin. I said this back in like sometime last year, and people call me crazy. But it's getting there, right? I mean, and I said top 5, not counting Tether and USDC. So all it has to do is flip Cardano, right? And it seems more likely at this point. And lastly, I'll go over Mars just because people have been bugging me, right? And people have been like upset with me just because I haven't talked about Luna in a while. And just because I don't talk about it on my channel doesn't mean that I've abandoned it, right? It's just like I just make videos that I want to make, so I just haven't been that excited about the Lockdrop. So if you go back to my video that I uploaded on Monday, right? I made a case like why money market tokens, I'm just not interested in them, right? And I'm not gonna go over too much time in this video because I already spent 23 minutes on this in this video. But I'm not like bullish money market tokens, right? I'm bullish on apps and its effect on the ecosystem, but I'm not bullish on tokens. So for that reason, I'm not really interested in this Lockdrop, right? Maybe I'm wrong, right? Maybe Mars gigapumps, and maybe I'm wrong, but I'm not participating in Lockdrop, right? I'd rather just park my UST on Anchor. But I will go over I guess the bullish case for Mars, for I guess the entire Terra ecosystem, and also for the Cosmos hub. Okay, so in this video with Danku, right, and Jose, right, he's at Delphi Labs. He kind of went over this concept of smart contract to smart contract lending, because with money markets, every loan in DeFi is over collateralized, right? So if you want to borrow $10,000, you have to at least put $15,000 worth of ETH as collateral, right? It's not really capital efficient. But with Mars, it's going to allow for contract to contract borrowing, meaning that these smart contracts, right, or these types of lending, it's going to be under collateralized. As retail users, we won't be gaining access to this, but it's gonna whitelist some contracts in Terra applications and also for Cosmos applications, right? So I mean, this is Terra's part of the Cosmos hub, right? The Cosmos SDK, right? Terra's built on top of the Cosmos SDK, right? The Atom ecosystem, and as you can kind of see, if you hover over Terra, it's connected to all of these other applications, right? Namely Osmosis, Juno, etc. And what Jose Maria Macedo said that was pretty interesting was that what Mars can do is whitelist contracts, smart contracts for Osmosis, for example, right? And it can allow leveraged yield farming on Osmosis by letting Osmosis borrow UST under collateralized and charging them an interest rate, which I thought was pretty interesting. So not only is Mars going to be net positive for the Terra ecosystem, it's also going to be net accretive in terms of value for the entire Cosmos hub. Which I thought was interesting, right? You even see Juno here. Juno is also a smart contract blockchain. Terra is connected, right? So in the future, if Juno smart contracts want to tap into Mars for under collateralized lending, right? If the Martian Council allows it, right? If the Martian Governance Council votes in favor, it's going to allow for under collateralized lending. So this is one of the reasons why I'm positive on the Cosmos Hub, right? I've made so many videos about the Cosmos Hub recently, at least this year. If you've kept track with with my long ass videos. So with Cosmos Hub, as these blockchains get more built out, it's actually accrues more value for other blockchains, right? Because if Terra, I guess, matures as a blockchain, these other smart contract blockchains can tap into Terra, and I guess tap into like the innovation that's going on here, right? So I think Mars is a really good protocol. It's definitely needed. I'm super bullish money markets. I'm not participating in a Lockdrop because I'm not bullish the token. But if you take a macro perspective on the effect of Mars and what effect it's going to have on the entire Cosmos hub, I think it's going to, accrue more value for Osmosis, Juno, maybe Secret, Sift, like any other, IVC blockchains that, Terra is connected to. So that being said, I think that's the end of the video. How long has this video been? 20. Okay, not too bad for a Taiki video. But I think there is a strong case to be made for Luna potentially outperforming in a bear market. And I'm not saying that Luna is going to do a chain link and go up like 100x or something. I'm just saying I think there's a strong case to be made that in a bear market, Luna Bitcoin, right? I think it's going to be in an uptrend, and Luna ETH is also going to be in an uptrend. Right? That's all I'm saying, right? I'm not saying it's going to pump. I'm just saying that I think it has a strong chance to outperform the majors. It's cool because, I think he mentions it here, or maybe not, but chaos, right? Luna is, I guess, taking on more of like FRAX's approach, right? Where, FRAX is a partially algorithmic stablecoin. And maybe I'll discuss FRAX more on my channel in the future. But I think FRAX is also interesting. Luna is interesting because Luna, just like holding Luna, gains you access to gain exposure to an L1 and also a stablecoin, right? Which I think is cool. FRAX less so, right? It's not an L1. It's just like a partially backed algorithmic stablecoin. But I think Luna is taking on an approach similar to that of FRAX, which I think is interesting. Which I think is definitely interesting. Because in a bear market, like people I guess should be like bullish stablecoins, right? Like maybe you're bullish like USDC growth, right? Like maybe you're like bullish. Let's go here. Maybe you're bullish like the market cap of USDC, right? But there's no way to gain access to like the upside of USDC because Circle I guess is like the company backing it, and we don't have access to gain exposure to like Circle equity. But at least with Terra and UST, we can kind of bet on the growth of these stablecoins, and FRAX also. So maybe that's more attractive from an investment perspective. So as always, none of this is financial advice, but something to at least consider. So thank you guys for watching. Let me know if you have your funds on Anchor. Definitely cool farming opportunities here. There's definitely questions about the sustainability of Anchor yields. That's always a question, right? And you should expect 19.5% to not be it's not sustainable, right? There are like a bunch of these other YouTubers like, oh yeah, like I'm gonna retire in the next 10 years by putting $1 million into Anchor, 20% a year, 200K a year, it's so sick, like those people like don't really know what they're talking about. These yields are not sustainable. If you listen to podcasts by the Anchor team, they've said that, hey, we started at 20%, it's going to go down over time, right? But the goal is to offer better yields than, I guess other applications, right? DeFi applications and obviously banks. So I would expect this to go slowly drip down over time, right? So the Anchor team is like, maybe it's going to go to like 90%, then 18%, 17%, 16%, but it's still going to, be more attractive than like most other applications, right? DeFi applications. Because I would much rather earn 19.5% in UST than like 200% in like some random like altcoin that's going to dump, right? This feels a lot more safe to me, I guess, in terms of like the sustainability of these yields. So, cool. Luna, still holding it, right? For better or for worse. I still have it on Ash Report for better or for worse, earning like 10%, I think. But it is what it is. Macro markets looking pretty scary, right? NASDAQ putting in a lower low. That's pretty spooky. Bitcoin isn't looking that strong, but in a sea of red, Luna doing well, right? I'm not saying that Luna is going to turbo pump from here, but what I am saying is that I think UST is going to turbo pump from here. That's the point of the video. So thank you guys for watching. Have fun farming out there, and let me know what you think about UST, the FUD, the PEG, $1 billion LFG, all that. Have a good one.